Good morning, welcome to Morning Markets. It's me, Chris Beecham, and Axel Rudolph, as ever, for your Thursday morning as we digest what's been going on in markets over the past 24 hours. Good morning, Axel.
Good morning, Chris.
Where do we start? It's a busy day, actually. It's a busy 24 hours, really, isn't it? You've got Bank of England, ECB, Amazon tonight as well. So there's a lot to talk about, I think, isn't there?
Well, I mean, with regards to the central banks, we don't expect them to cut. We don't expect them to do anything. What will be interesting to see is what the Bank of England will say with regards to forward guidance. We still expect them to cut this year. The question is when. And obviously, they will more or less say what they always say. They will look at the data and let the data guide them. So.
Exactly. So we're expecting, last time we had 5 votes for a hold and 4 for a cut on the Bank of England. And this time, at least the one in front of me says, we're expecting 2 votes for a cut and 7 for a hold. It seems to be the way we're looking at that today.
Yeah, not surprising. And inflation is not really coming off, is it, in the UK? I mean, if you compare us to Europe, for example, we are far above our 2% Bank of England target.
And then ECB, no change again.
No.
But this is interesting, isn't it? Because you've got the euro, which was 120 about a week ago, and is now back at 118. So that's going to make them feel a little bit calmer about the outlook for the economy, isn't it? I think because if you've got a strong euro, that in itself is quite worrying. And of course, they're dealing with the dollar weakness. I was talking to people yesterday about this. The fact that Donald Trump is now a fan of a weaker dollar, or at least doesn't seem to care, means that the dollar seems to be given a green light to weaken a bit over the medium term. Yes, it's rallied from where it was a week ago, but that seems to be the direction of travel. So that poses major problems for these central banks in terms of how they deal with the currency that is continuing to strengthen. So that's the particular one for the ECB, I think, as it comes into this meeting, is where it's going to go from here on that front.
Yes, but as you say, they'll be encouraged by the fact that the euro is coming off again and the dollar is strengthening once again. And, well, what was also interesting just a couple of weeks ago is the probable joint intervention by the Fed and the Bank of Japan to push the yen lower. Basically, we went, we were always discussing 160 yen, weren't we?
Yeah.
And they managed to push it down to 152, but we're back at 157, 58.
Yeah, it is. And it's always the case, isn't it? It's not the actual level that they're concerned about particularly. It's the pace of travel. The fact it gets to 160 is less important than the rapidity of the rise. And I think that's been the key lesson from dollar yen since October, which has gone from 150 to 160, mostly because of the change of government and the expectation of fiscal stimulus. That has really sort of unsettled the Bank of Japan quite substantially, hasn't it?
Yeah, but what's interesting is that 160 level still seems to be an area where the Bank of Japan historically has intervened, and we can see that a few years back. So it's sort of preparing investors and traders and saying to them, listen, if you get towards that area, we might intervene. And because of that threat, I think that alone will probably lead to the ascent we're seeing at the moment slowing down, and perhaps already it acting as resistance, even if the Bank of Japan were to just slightly intervene or talk about intervening again around that area.
Exactly. We should look at the move as FTSE 100 this morning, because of course we are now open. You can see hopefully on there. I need to update this because it's WPP, and I don't think they're in the FTSE 100 anymore. I'll do that. I'll put my list for later today because they're now too small, I think. I think they're being kicked out. But it's notable to see, if you can see on my, you've got LSE Group, London Stock Exchange, Experian and Relx, all near the top of the index. And they, of course, were so heavily hit on Tuesday because of Anthropic's announcement of a new legal tool that essentially threatens to undermine a lot of their businesses. If you look at those 3 stocks, I can just take Relx as an example, they've had an abysmal run since the summer.
Absolutely awful.
So this has come when the FTSE 100 has sailed to record highs. And I suppose the FTSE 100 doesn't care because these are fairly small stocks. They're not banks and they're not miners. But for those invested in the sector, it has been a dire period because you've got this absolute bloodbath. And not just in the UK, of course, in the US and in Europe, these software as a service stocks, or connected with that at all, have now dropped so substantially. I mean, Relx isn't the kind of stock you normally see dropping by that much in one single day. That is a percentage. Let me see if I can get my high level.
I was trying to figure out the percentage here. I mean, you can clearly see that you're already you've been in the downtrend for much of last year.
Yeah.
So from the middle of last year. So it's not really surprising that it is falling further. It's just accelerating the decline. And today's bounce is probably just a small, even if it's 3.5%, it doesn't mean anything in the context of it coming off so far.
It barely puts a dent in it, doesn't it? And
exactly.
I was saying to people yesterday, of course, RELX has come off an extremely good run. And it's a classic example there, isn't it, of markets falling 3 times faster than they rise, of months and months, years and years of gains wiped out in a very short space of time. But for RELX to fall, that was 15% it fell on Tuesday.
Yeah.
It's not the kind of stock that tends to do that. It's a kind of existential risk. LSE Group, another one where sort of I speak as a shareholder of LSE, unfortunately, still. It was a very, very good performer, but you can see how it's really lost its way. And as you say, the chart is telling you what to think. There are your lower highs, there are your lower lows, and that's interesting to see in early trading this morning. So those, a little bit of a bounce for those, but not much to write home about, to be honest, in the grand scheme of things. On the losing end of the spectrum, no prizes for guessing who's at the top.
The miners, yes. So they were outperforming when the gold and silver prices were rising. We saw yesterday again silver coming off more than, I think it was 13%, wasn't it?
It was 30 overnight as well, yeah.
So those who sort of bought it 2 days ago thinking, oh, they looked really, really clever and it was going to go back to $100, not so sure now, and gold was coming off. So clearly miners are suffering. And what was interesting yesterday, we made a new record high on the FTSE 100, but mainly driven by defensive stocks. We had healthcare in there, we had utilities.
They're doing very well, yeah.
Non-cyclicals. So we're seeing basically miners coming off again with these commodities. And the question is, for me at least, is this a major top in silver? And I think it looks more and more like one, because when you get these parabolic advances, and do you remember, Chris, we talked about this last week and the week before.
Last week. We don't want to be smug about these things, but we did, I think it was Thursday morning, it was a week ago, we did use the phrase about parabolic markets and what happens when they correct.
So, it may well come off much further, and who knows, it might go back to $50 or something like that, which, a lot of investors don't think could happen. But it's not looking that bullish. And what we now need to see is a rise above the high we made 2 days ago.
You just get that
that's around $92. If we can manage to do so, then perhaps it's more constructive. But as long as we stay below that high, well, short term, the trend is pointing down.
It is back into single-digit percentage losses. I should sort of play devil's advocate here. But what I think is certainly interesting, if you on the chart, you can see how there's all these these wicks of the candles, shadows. I'm sorry, I forgot the correct term. There you go. I've been told off this morning. Around 77, but I think it's so often the case that when you get big falls like this, it doesn't stop in one go.
No, it usually doesn't.
Often see exactly the kind of price action behavior we've got here, which you have a big fall, a cataclysmic fall, 30%. Let's be honest, and then it rallies, and then it goes again. These things don't stop in a single moment, or very rarely do they. Yes, I know they almost did. They really did at the end of December. We had 10% and then it went off again. But it affects psychology, doesn't it, as well? It's a candle like any other, but in terms of the magnitude, it really does sort of affect how people think about what they're expecting next in terms of the price action.
Well, and the reason for that is that it does a lot of damage, a big reversal like that, because everybody who went long from sort of $80 upwards, and that's probably a majority of retail investors, they got caught in this big decline. And apparently in Asia, I heard, especially in China, there were a lot of people who just basically bet the house on silver.
Yeah, exactly. Yeah.
And they got absolutely slaughtered here, which is why we talked last week about having guaranteed stops and having pretty tight stops, because basically you had this doji formation just before it topped out. And I know hindsight is a beautiful thing, but it was telling you that it was getting close to a potential top there.
So remind us again on a doji, for those of us.
So basically the open and the close is more or less at the same level.
This one here, the 29th of January
and you can have a spike, so a shadow to the upside, but then it comes down again and closes towards the open.
Okay.
So that would be a gravestone Greystone Doji, if it was a proper open and close at the same level, they rarely are, but it's the sort of area that we're talking about.
Does the same apply to gold? Because it's the more grown-up cousin, if I can use that term.
Not
really?
quite. I mean, gold, we retested the highs, failed, came off a little bit, but then we had the big declines. So that would have been much more difficult to spot, to be honest.
What I like about the way Axel does is he does it without looking at the chart at all, because it's all so ingrained in your memory that you can do this without looking at the music, so to speak. It just carried in his head all the time. Last night we had Alphabet numbers, or Google, for those of us who don't talk finance and talk in normal language. Alphabet, which
not great.
Not fantastic. The one thing that really, because it was down 8% at one point, and what really spooked everyone was the fact that it's going to spend an extra 50%, something like $55–60 billion on capex, capital expenditure. So essentially the AI boom. And that's the thing that really made everybody think that's a lot of money, even for Google.
Yes, and the question is, will that money actually make more money in the future? And it's getting to a point where we already saw that at the end of last year, that investors are getting more jittery when it comes to tech stocks, and that's why we've seen this sort of
very, very jittery.
Yeah,
we do this dance every earnings season. It's kind of, they make loads of money, but they're going to spend loads of money on this stuff. Is it going to come to fruition? And that's where you can almost understand why people then look back to the dot-com crisis and think, well, they spent loads of money then, and that didn't turn out well either. So the echoes are there, aren't they?
Yeah, but what was interesting, we saw that at times during 2025, in the first part of the year. But it didn't matter. No. We just continued to rally very, very strongly. Since the latter part of last year and this year, we're seeing more and more reactions which are more mixed. We had some underperforming tech stocks, some outperforming ones. But generally speaking, if you look at the S&P compared to, even the NASDAQ, even more so compared to the Dow is still holding up because there's this rotation out of tech stocks into the defensive stocks and normal stocks.
Year to date, the Dow is up nearly 3% and the NASDAQ 100 is down 1.4%. So again, not to sound like a broken record, though I can't help myself, it is this kind of rotation that is healthy for bull markets. They don't live or die by one set of stocks all the time. It has to go through these periods where you have other parts of the market, other sectors beginning to recover and just leading the way to an extent. And I think the Russell was, yes, it is still, to be fair, one of my least favourite indices, the Russell, 5.8% up this year. So it's been an absolutely storming start to the year for small caps. So what I found interesting about Alphabet, is the way on the chart you've got this defence or this battle around those previous highs at 328. And we did dip below that sharply, but we're just about the same place. That was the high from the end of November. So it's interesting again how previous highs become possible support.
Yes, they do. They often do. And the real question for me is, and I said that at the end of last year, whether we can, on all of these stocks and on the indices as well, whether we can hold above the November lows. Because for me, technically speaking, those are the lines in the sand. And as long as we stay above these, we still look healthy. And I think you were going to talk about the January effect, weren't you? Where basically, if you have a great start to the year, which we definitely did have in January, it tends to look very positive for the rest of the year.
Yeah, so if we look at what we expect from the year based on what you see in January, it's ran some numbers earlier in the week, and this is based off the performance since 2000. The numbers hold, even if you go further back to 1950 rather, sorry. The average return for the S&P, this is always the S&P data, is about 7.7% every year. If you have a year where January itself was positive, and 2026 is such a year, so we were up 1.1% in January by the close on the 30, or whatever the last trading day of January was,
31st,
Friday. Yeah, it's 31st. If you get a positive January, that rises to 12.5%. If you have a negative January, the average return is just 2.2%. So I think the old cliche is as January goes, so goes the year. And there's been a lot of and you yourself have said it, you've had 3 years of double-digit returns for the S&P 500 and 3 very good years for global markets generally. Can you clock up a fourth? And it's a midterm year. Historically, they can be weaker, or at least certainly they don't go anywhere. 2022 was an extreme example, but midterm years, 2018 was another example, that they do not do as well as other years. But if you have a positive January, that kind of it doesn't guarantee you, of course, that you'll see a very strong return, but it does suggest, or at least provide, sort of tilt the odds in the favour, perhaps, of a more positive year overall.
That is true, but we're talking about averages here, and obviously you could have a down-performing year like this one, compared to the last 3 years, which were double-digit gains. So it would just be part of the stats.
Yes,
we're talking about averages.
If you look at you look at years where you had a very weak January. This is going back. So, for example, 2009, of course, was a very, very weak January and ended the year very, very strongly.
Yeah.
I'm trying to find one that proves the opposite as well. 2020, a lot happened in 2020. Down slightly in January, but obviously a very, very strong end to the year. So I guess not a guarantee, but it is a notable point that we had, for all of the worry about, well, it's a midterm year, it could be poorer. At least January itself set us up for what could be a more positive performance. We should mention everybody's favourite stock, or one person's favourite stock, which had results this morning. Can you guess which one that is, Axel?
I can't.
Oh, you can't. Oh,
I lost it. Who is it?
It is Vodafone, of course. We should.
But is it
duly
somebody
mention.
in-house who's got Vodafone? You said you know a person who loves
Yes,
it.
we know his favourite stock
I
is Vodafone
didn't know who
of
that
this
was.
parish.
But yes, Vodafone is interesting. Again, I mean, it came off its highs, but it looked really, really bullish and parabolic if you look at the daily chart.
Yeah.
But right now,
It's not often you can say Vodafone has gone parabolic.
No,
It's
no.
the most exciting stock in the world.
But I mean, Vodafone, it struggled. It's managed to turn things around, and it basically came out of the long-term bottoming formation here, and it is looking, to be fair, despite today's sell-off, quite positive, because the fact that we're stalling where we're stalling is not surprising, because it's basically old resistance going back to lows, exactly that area. So
May 22.
it's totally normal. But the trend is your friend, and that's clearly been pointing higher for the last four months or so, or even longer, no?
It's a very credible performance. The other one maybe we should cover, there's quite a number of FTSE 100 stocks reporting this morning, but the other one we should talk about is Shell, because they missed estimates.
Yeah.
And there's a lot going on with oil prices at the moment. But they had a poor performance. I think there was the chemicals division was dragging on performance.
Yeah. I wrote about Shell, so if anybody's interested in that, pre-earnings. But basically, yes, Shell is a more sort of sideways trading stock where it sort of tends to fail in the area. We're just sort of struggling right now. If you look back historically, we are sort of at these tops, and quite often we come off these tops. So unless we rise above last year's highs, it'll be difficult for us to continue to the upside. But as you say, the oil price also plays a part here. The question is, are we going to see lower oil prices, like many expected, us included? I believe we could discuss this in December. Or are we actually seeing a complete reversal now, and oil prices heading back up again towards $70 or $80? And that's interesting to also see.
Well, it's recovering, isn't it? We would obviously, there's a lot going, I said obviously a lot this morning, but there's a lot going on with oil prices because of the Iran-US situation, put it that way. There should be talks. There are talks again on Friday. They were briefly cancelled yesterday, which led to a spike. If you look at yesterday's candle, you can see that surge around the highs on fears that the cancellation of the talks meant something more dramatic was about to happen. Those talks are now back on, but from what we gather, neither side sounds particularly hopeful about the outcome. And that's why you've got oil prices continuing to recover here, because it is the case that you've seen these recoveries in oil, but it then sells off again. You're just wondering if this time is different, really, of course.
Well, I mean, technically speaking, what you want to see as a bull is a rise above the September highs. If you can manage to do that, and they're just a few dollars above where we are now, then perhaps we're seeing a bigger reversal. If not, we might fail once again in this area, just above $60, $62 or so, as we have done exactly at those highs here that you're just pointing out, August and September of last year. But in the short term, since the end of last year, we are in an uptrend now. We have to admit it is an uptrend. We've got a series of higher highs and higher lows, and therefore the odds are greater for it to continue to go upwards, at least to that resistance area you just pointed at, around $60, $62, than it is for us to see a reversal.
Yeah, we have certainly seen that steady recovery off those lows. I'm going to do something I rarely do these days and draw lines on a chart, but that's the kind of, until that breaks.
Yeah, which is this week's low, basically.
Yeah, so that's sort of the first proper test of that trend line, or rather the first proper pullback you've had forming potentially that trend line, has to be said, is the way to look at this really in terms of what we're seeing. And then we had a Nikkei record high this week. We had a FTSE 100 record high. We are still waiting though for the Dow to cross this magic 50k mark, aren't we?
Yes, but again, it's not surprising. It's a round number. It's a major psychological support. I mean, you laugh, but you know when people
No,
fill
I
up their
entirely agree.
tanks, some people to this day, even though they pay by a credit card, still want to
I
get
still
around.
do.
Exactly.
I still try and get it done.
Why do we do that? It's just human nature.
Passes the
So
time.
round numbers we do like, and it's not surprising that the S&P stalled at 7,000. It went to 7,002, I believe, and then
Yes.
came off again. But
It
yeah,
achieved
it's a
its
round number. 50,000 is a big, big round number. Therefore, I'm not surprised that we're struggling here in the short term.
Yeah, but it's still very much in an uptrend.
It
despite
clearly is, yeah.
And weathering the storm quite well, I think, because you've had an earnings season that's not exactly been spectacular, but enough maybe to keep everything ticking over, which is what we want to see really. And February has a reputation of being a choppy month. I think is it the second worst month on average for the year?
I believe so.
I think
yeah.
it has a poor record, so it can't be trusted too much. But so there we are. I think that's what we've got this morning. There is plenty going on. Don't forget, Bank of England at midday, ECB at 1:15. No change expected from either of those. And then briefly, the last one we should just talk about is Amazon. Fresh from decimating the Washington Post, Jeff Bezos gets to Jeff Bezos' Titan reports numbers tonight, and there you have it. It's not a fantastic performer. Amazon's still well off the highs from November. Disappointing in fact, because we were here in January. There's actually been a miserable year for Amazon stock, but predicated hopefully on probably further recovery, and not one where AI plays too much of a role either.
Well, they are investing in AI, but not to the degree that Alphabet and others are.
Very much almost a consumer staple at this point, given how many people use it. But one to watch for. So that is tonight. So Amazon is after the bell, 9 p.m. And that's everyone apart from Nvidia now, I think, the Mag 7, isn't it?
I believe so, yes, you're right.
But earnings season just beginning to tip into its slightly less active phase. Thank you very much, everybody. Have a good day, and we will see you again next week.